Yay!
Set your chat is the one.
I don't think the setting is from here. Is it settings from here? I don't think so. Stream. It should be ada tu.
YouTube.
Yeah, YouTube punya settings. No idea. Sabar ah.
Can you go there
Yeah. Sure.
and just press the live?
The live. Should be ada tu. Yeah, YouTube punya settings.
Nah, set it up, but
No idea.
Sini ada kah?
oh, try feedback.
Sabar ah.
Wah, who watching now? Who's watching?
Can you go there
Yeah. Sure.
Yeah, you and itu.
and just
I haven't
press
even
the
had to iklankan WhatsApp ni.
Should be ada tu.
Where's the chat?
Yeah, YouTube punya
Di
settings.
sana. Try set it up, but that no benar juga.
No idea.
Sini ada kah?
Oh, wah, edit video. Why nada? What's that? Why chat no have? Why is chat not available?
Like the last line. Was it?
What? What?
You,
What?
you can just restream if not. And
It's made for kids. Ya Allah. Okay, so we're Nina. Wait. No, it's not made for kids. Okay. Save. I thought I clicked that button tadi. Okay, so try again. And suddenly, huh? Siapa? Chat. Ah, what else? Docs. Chat. Where's it? Okay. What? Okay. So testing suara. Macam mana? Teruskan saja ataupun okay, checking chat. Okay. La 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 la. La 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 la. La 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 la. Oh, good ah. Bah, aku saja kongsi load the link to my WhatsApps and then I'll start streaming. Right. La 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 la. Oh, good ah. Bah, aku saja kongsi load the link to my WhatsApps and then I'll start streaming. Oh, I see. Kurang 2 kali. Okay. Okay, we have now for watching. Okay, so I think we'll just go to the oops, oops, not there research. Okay, welcome everyone to episode 10. Apologies for the delay. There were some technical issues. Okay, so let me just double check on everything. Suara apa? Test the chat. Okay, cool. Okay, so again, welcome to episode 10, Business Financial Planning and Management. I hope you can hear my voice clearly. If not, just say so in chat and I'll try to adjust when I can. Hmm. So, this is the 10th episode. So, what I'll be covering is the introduction to the series and the streamer, myself. Just a quick one. And then the core content, business financial planning and management. Then I'll be sharing just again a bit of our programs and activities related to entrepreneurship, and if we have upcoming streaming content. And then if there's any questions, I can answer, or if you guys need me to show more details, kapa, I can try lah. If ada, but I'll do my best for the main part. So, basic introduction. So, if you're new to here, this is a series of entrepreneurship topics. Some of the snippets will be used for video content for online referrals. And in general, most of the topics is the topic shared here in the YouTube series is a summary of workshop content. So, if you want to find out more, if you want to learn more in depth, you can join our workshops. And I will give some time between main topics for any Q&A or any discussions. And if you want to, you can share the share the YouTube link. Okay. Oops. Okay. So this is our 10th episode. Hopefully you've joined us from the beginning. If not, the rest is actually available on the YouTube playlist. You can look for the entrepreneurship series. Okay, so this was the planned topic. So some of them has changed. If you follow from the beginning, there was a few changes. So we'll see what we can do for the rest of the year. Okay, and if you don't know me, my name is Muhammad Fadlah Tudun bin Haji Hassan, alias Muhammad Hasbullah Bobby. You can just call me Bobby. I'm an entrepreneur, an endurance athlete. I love business, I love IT, and I love science. And I love teaching what I know. Okay, so here's the main topic. Here's the core part of the talk or the session. Okay. So I'll be talking about basics of business financial planning and management. And if you don't know anything about LiveWIRE or anything about business, these are the least that you should know. So in general, when you want to start a business, how much money it takes to start or expand your business, profit and loss, with whether your business is making money or not, return on investment, whether your capital investment, the rewards, pay back the risks. Okay, and then cash flow, especially cash flow forecasts, and a bit on the cash and cost management. So the strategies. Once you understand the basics of the financial planning and recording and tracking, then what you can do with that information. And finally, a bit on our iCashflow.bn app. So if you again you don't know how to track your finances, you can just download this app and use it, and you can track your expenses and income, so you can see where you are financially, whether it's in business or personally. Yeah. So okay, start with the startup or expansion costs. So you have to look into what cost consists of, especially in business. So in business, there's actually two parts: startup and the running costs. So some people think about sometimes it's just the startup, but they don't think about the running part, or vice versa. They think about the running part, but they know it took so much to start up the business. And with each, you can actually split it even more further. So startup, you can split into assets purchase, which includes again there's a split into assets purchase or fixed assets versus stocks purchase, and then expenses, everything else. And then running costs, some of this will be overlapping as well. Is the fixed and the variable. So again, if you haven't learned, it's fixed is in general the expenses that you pay almost every month. Okay, and that's interesting. I'm just gonna okay. Okay, it looks like we have spam right now, so gonna block it. Okay, so where was it? Where were we? Ah, yeah. So fixed and variable. So running costs, fixed and variable. So fixed costs are in general the things that are in general more or less the same every day, week, month, or year. In general, includes rent, sometimes bills. Although some people argue bills are actually quite variable, but in general it's more or less the same. But the true variable cost is when the more you sell, the more you need to buy. So for example, in a retail shop, the more you sell, you need to stock up again. So the more you sell, the more you need to buy. So that's in general what it means by variable costs. Your costs varies according to your sales. Okay. So what are your startup costs? In general, these are the items listed. So assets, as you can see here listed, aircon equipment, office equipment, furniture, vehicle, and initial stock or stocks purchase. And then expenses, which includes rental deposit, renovation, and admin costs. So I'll explain later on the differences between assets and expenses. But you probably already have an idea, but I'll explain again later. And of course, miscellaneous. Okay, now looking at running costs. Okay, so variable costs, as mentioned, the more you need to sell, the more you need to sell, the more you need to buy. So it's usually raw materials or the finished goods if you buy and sell the finished goods. And then there's fixed costs in general, rental, salary, utilities or bills, loan repayment, and other admin costs. So these sometimes are also called overheads. So in general, they are over your head. Most of the electricity, the aircon, and so on. So I don't know for sure why it's called overheads, but that seems it makes sense. And then rental and salary usually are the biggest items. Usually takes more than half of the budget of the running costs. So you can other words that people use to describe startup costs and running costs is capex and opex. The startup costs, capital expenditure, and running costs is operational expenses or opex. So how much money you need to start up and run your business in general is the estimate of the startup costs, the assets that you need to buy, the initial expenses, and then add the estimate of the running costs. This depends on your business. So some small business is just one day, a week, or a month. But bigger business, brick mortar businesses usually requires 3 to 6 months, maybe even a year, just to make sure that it keeps on running for the amount of time. In general, we recommend 3 to 6 months. So once you total it up, that is the total cash required to start up and run your business. Okay, let's look into something more practical. So what are your startup costs? So most common business in Brunei is nasi katok or just rice, not rice. So uh, let's look into the items that we need. So you can list it down. We'll just randomize, just list it down. Um, so here we have cooking stove, rice cooker, propane tank, or tonggas, tables and chairs, fridge and freezers, pans and utensils, rice, chicken, cooking oil, other ingredients. We can probably go more details, but that'll take so much space. Paper and plastics for the packaging. 1617. In Brunei, that's the sole proprietor or the business name registration. Halal license, rental, salary, bills including electric, water, and phone. Again, you can split this up if you want to, and advertising. So again, I list it down. The next step that you need to do is actually to categorize it. So categorizing the items. So there are similarities between all this. You can probably guess which one is the labels. So the question is which one's assets purchase, which one's stocks purchase, and expenses. Let me explain the difference, especially for those who never learned accounting. This is not in-depth accounting, but in general, one definition of assets is income generating property. So those are the things that you need to own or buy so that you can run your business. And usually they usually last at least a year. And if the business goes south, you can sell your business along with those assets. So examples here are machines and furniture and so on. Then stocks purchase, they're also assets, but more on current assets. Another name for them is cost of goods or assets purchase. Sorry, I think there's a mistake in the text there. So it's supposed to be cost of goods and stocks purchase or variable costs. These are the things that you need to buy in order to sell. So again, if you don't buy them, then you can't sell them. Although some can argue you can buy with consignment. So you sell first, then you buy later. That's another topic. Okay, next is expenses. So most people would think every one of these items, assets purchase and stock purchase, are expenses. But specifically, expenses in these terms is things you need to pay but you don't own. So that's the difference between expenses and assets purchase. You may not be able to sell them. So in general, you use electricity, water, but you don't sell those things. So examples here are bills, rent, and salaries. So knowing this, you should be able to split these items into the respective categories, and then uh, it's not necessary though to categorize them. I mean, to explain to the investors, they in general just need to know how much you need. But it's better if you can split them into these categories, especially if the investor or the bank or the venture capitalists or the angel investors are specifically just wanting to invest in specific items. There are some financing that only supports assets purchase, only but not stocks purchase. Maybe assets purchase and stocks purchase, but not expenses. Once you know the difference, then you can identify which one you can get financing for. So not all banks are equal. Not all sources of funding is equal. Um, I think there was another talk that we had. I think in early part of the year, sources of finance. I think it was in March. So you can find out more on what type of financing is available. So again, identify the categories so you can easily, at least more easily, identify what you can get funding for. So once you have the items and categorize them, then you can identify the costs. We can right now we can just think at the top of your head, but we can if you want to be more realistic, you can look out. Once you identify the items that you need, then you can research what are the actual costs. But for now, we'll just put almost random number, a realistic number for these items. Okay, so for the assets purchase, for the expenses, and stocks purchase. So again, stocks purchase are in general the cost of goods, the things that you need to buy. But depends on how you're gonna do the business. If you're just gonna go business for one day, you can just buy for one day. But it's highly recommended that you purchase the stock for a certain amount of time. So for example, if you're doing the gerai Ramadan, that's 4 weeks. If you're doing the gerai perayaan, that's 2 weeks. Or if you're just selling on the weekends, then it's just one day. So depends on the terms, the duration of your business. Of course, ideally you want at least a month. So here we will calculate for 30 days a month, but we're estimating sales of 100 per day. So again, this depends on your business, on your projections. We'll cover a bit of that later, a bit on sales forecast. Okay, so it depends on how much you expect. So for this one, we can generally say that you can sell 100 nasi katok every day. So these are the costs for selling 100 nasi katok every day. Okay. So next up is we total them up. So you can see assets purchase 750, for the stocks purchase 3,000, and for the expenses 1,430. So if you want to bootstrap a bit, you can probably reduce the stocks purchase for, again, either a day or a week, or so on. This is for one whole month. It's actually, again, recommended, if you want to calculate the startup costs for that one whole month. But if you are short of cash, you can actually just start off with whatever you have. Another one is assets purchase. You can save budget. Again, it's a food and beverage business. You can easily start at home. But keep in mind, other people at home might also be using those items as well. So it's recommended for you to have a separate kitchen with separate items as well. Okay, so then finally we total it up. So in general, to start up a nasi katak business, takes around $5,310. According to this calculation, it may differ based on your sources. So again, where you're buying your stuff, your assets purchase, your stocks purchase, maybe the cost of the expenses might differ as well. Depends on your rental, depends on how many people that you're hiring. In this case, either two people for 450 or three people for $300 per month. So that's the startup cost. So that is the amount that you need to start up your business. So this is the amount that you can ask your investors, or the bank, to start up your business. Okay. So again, what we just did is list the items, categorize them into the respective items: assets purchase, stocks purchase, and expenses. List their costs, review costs, and note certain items you may want to calculate for a certain period, or hilang the parentheses. And again, it depends on your business, either a day, a week, a month, or so on. Or as mentioned earlier, maybe 3 to 6 months. I think a good example of business that you might have to calculate for 3 to 6 months is usually agriculture. So it depends on how fast the harvesting is. And then finally, you total the category costs and calculate the grand total. Okay, so that's the startup costs. So I'm just checking out if anyone has any questions. Okay, so far, okay, none. Okay, so if you do, just again ask. I'll answer as soon as I can when I can. Okay, let's just continue with profit and loss. So we've started off with how much money you need to start off the business, but usually that's just the beginning when you're asking for funding. They want to know whether your business is also profitable. Whether for a bank is whether you can pay them back. For investor, whether you can make them money, tons and tons of money. So you need to look into the profit and loss. Of course, for yourself as a business owner or manager, you want to make sure your business is profiting as well. Unfortunately, I know several entrepreneurs, usually small business, that don't even keep track. So they don't know whether they're making money or losing money. But thankfully, most of them who have survived actually make money. But that's more of an incidental thing. If they didn't make money, the business would have stopped. But if they make money, they would have continued. But it's good if you know if you're making or losing money, so you can make that decision. Okay, so the business is viable again if your income from sales minus the running costs is positive. It profits. So if it's less than that, then you're gonna lose money, and if you can afford to lose any more money, you have to stop the business. But in addition, it's recommended that profit can cover the startup costs within a reasonable amount of time. So basically, in this case, 1 to 2 years. But again, depends on the terms and conditions that you have with the investor or the bank. But 1 to 2 years looks like a good number, and then the rest will be just profit. So again, profit and loss statement is income from sales, and then minus the costs, the running costs, which is the variable and fixed costs, is profit or loss. So in business, it is critical to keep your financial records. This is simply called bookkeeping. So you're keeping track of your sales that you get every day, and then the costs when you purchase stuff every day, every week, every month, and then you tally it up and you see whether you're making money or not. Again, very critical whether you need to know whether your business is making money or not, profiting or not. So before we move on, These are the terms that we're going to look into: sales, direct cost of goods or variable costs, gross profit, fixed costs, and net profit. So in general, sales. So right now it's more of forecasts, but of course, when you're recording, you can actually keep track of your sales. And then again, that's the things that you sell that you make money. Then you have to consider direct cost of goods. Or in this case, variable cost as well. So you need to know how much it would cost you to sell those items. For every item you sell, you need to buy first. Simple one is if you're buying a canned drink, you have to buy it first. So usually people buy those cartons and then sell them individually. More complex, although simple but still complex, is again the our example is the nasi katok. So in order to sell the rice, you need to buy the rice, the chicken, and the other raw ingredients. So you have to calculate for that. For every unit, how much it is. We have other workshops that we can break it down a bit, the cost breakdown for each units. And then gross profit is simply the profit from just sales minus the direct cost of goods, but that's not the net profit. So some people confuse the gross profit with net profit. That's not the net profit yet. The net profit is only after you minus again the fixed costs, the rental, the salary, and so on, and then what's left is the net profit. So again, sales minus variable costs, you'll get the gross profit. And then fixed costs, which includes rental, bills, marketing, salary, and others, are your fixed costs. Then, in order to find out whether your business is profiting or losing money, is sales minus variable costs and fixed costs. So that's the general idea, the general principle. But let's look at an example. So this is the nasi katok. So sales here. This is more of a forecast, but it can be again depending on how you record. You can actually record every day and then you can find out. But this is more forecast. So assuming you're selling for $1, I know nowadays there's a few nasi katak that sells for $1.50. But let's just say for simplicity, $1. $1. So for that's a miscalculation. Here I put 200 sales. We'll stick with that. 200 sales a day. So then I will assume 30 days a month. So on average, most months are about 30 days. I know there's 28, there's 30, there's 31, but on average it's 30. But again, if you want to be more accurate, you can. So you can calculate for that month. This one, I'll just calculate the rough number. Then the variable cost here is, again, we can break this down even further. There's a way to calculate this, but I'll just tell you that variable cost for nasi kato is in general 75 cents, depending on your suppliers. Then again, we sell 200 a day times 30 days. So the cost of selling the $6,000 worth of nasi kato is 4,500. And then again, gross profit, not the true profit. The net profit is just the sales minus variable costs, which is 6,000 minus 4,500, which is 1,500. So that's whatever money you have left after you sell, you buy, then you sell, you buy and you sell, and then at the end of the month, that's the amount of money you have left. But you need to account for your fixed costs. So again, depending on your business, so your rental, your bills, marketing, and salary, and so on. Uh, and then once you total it up, the total fixed costs. So then you calculate again sales minus variable costs 4,500 minus fixed costs 1,200, and then that's what's left. Okay, somehow those numbers. I think that was from the yearly one. I think I changed this. Sorry, I'll change the slides. Okay. Yeah, that was from the calculation of the whole month. I thought I changed that. So it should be 300. The 6,000. Let's call it 6,000 minus 4,500. What is 1,500 minus 1,200? Yes, it's supposed to be 300. I thought I changed that already. So that's supposed to be 300 profit per month. We can, yeah, sorry about that mistake. Okay, but this one is correct. Okay, so that one is just a simple one page. But usually in business plans, they usually like to see a monthly calculation. Here you see at the top is 1, 2, 3. That stands for months. You can, if you want to, you can do January until December, or if you want to be realistic, let's say we started the business next month, December, until January the next year. Sorry, yeah, December until Yeah, December and November next year. So again, calculated $300 profit per month, and then for the whole year, the profit is $3,600. Not much, but it is a small business, so this is actually quite good for a small business. Okay, so that's the profit and loss. Okay, so so what we did was for this session was we identified the items and their values, especially the sales, the cost of goods, and then the fixed costs. Then you can calculate for the gross profit and net profit. Then you may total up for a day, a week, a month, or even a year. Okay, so that's the start. Sorry, this is not calculating startup cost. This is supposed to be calculating profit and loss. Okay, so the title's wrong. So something that I need to change. Okay, so now on to the third point, return on investment. So whether your investment is worth it. Okay, but before that, checking if there's any questions. Okay, what was that? Okay, okay, seven watching. Where's the comments section? Okay, I don't see the comments from my phone. I thought I could. Okay. Anyhow, there it is. Okay. Okay. So no questions. Okay. Let's look into return of investment or return on investment actually. So in short, ROI, return on investment. Um, so it's a metric used to evaluate how an investment has performed, and usually it's expressed as a percentage by dividing the investment's net profit or loss by initial cost or outlay, which the two things that we just calculated earlier, which again the net profit and the startup costs. Uh, Hi Rafiuddin, thanks. Again, if you have any questions, just ask. Okay, so return on investment is calculated by net profit, which we just calculated. But it depends on the per month or per year. So then you have the return on investment per month or per year, and the startup cost, the initial costs. Okay, so the formula here, which we can use again, net profit divided by startup cost times by 100. So that's 3,600 per year. Okay, based on the $300 per month, and then divided by the startup cost, which we calculated earlier, 5,310. So its annual return on investment is 67.8%. So in order to return the whole investment, takes more than a year, more or less. On that note, there's another calculation that we can use. But it will return 67.8% of your investment. So from the 5,310 in that 1 year, it returns you 3,600. So it's just a rate that you can see. So as long as it's positive, it's good. In general, anything above 50% is good. Something like I just mentioned. So how long it would pay back that amount. So we can twist it around. So the startup cost we divide by the net profit, either monthly or annually. Depends. But in this case, we do monthly. Yeah? So the startup cost, which again we calculated 5,310, and then divide by the monthly net profit. And then we can see it takes 17.7 months. Or we'll round it up into 18 months. So if someone was to invest in this business, the business will get back its return by 18 months, and after that, that's gonna be profit. Or in other cases, if you want to borrow from the bank, so that amount of money, that $300, you can use to repay the loan that for that startup. For the example, if you're loaning from the bank, then you can calculate you can pay back within 18 months. So you can commit to about 2 years of loan repayment. Okay, so that's the payback period. So not bad for a small business. So as mentioned earlier, a good payback period is 1 to 2 years. So this is smack in the middle, 18 months. Okay, so what we did just now was we calculated the return on investment. Again, we have the net profit and we have the startup costs, and then we just use the formula to calculate for the ROI or the return on investment. Okay. So next up is cash flow. So those 3 points that we just did is in general is good enough to know how to manage your business properly. So again, the startup cost to start up the business, the profit and loss, whether it's profitable, and return on investment, something that you can explain to the investors how long will they get the money back, or what's the return on the investment. But most banks, most financial institutions will want a cash flow. Of course, this applies mostly to traditional businesses. For innovative business, it's a bit challenging. It's mostly forecasts. It's not based on anything. But for again, for most financial institutions, they'll ask for business plan and cash flow. So specific, they're actually requesting for cash flow. So here, let's look into the cash flow. Okay. So the cash flow forecast, cash is the lifeblood of the company, and similar to the profit and loss, is money in, money out, and then that's the net cash balance. So similar to profit and loss, but you might notice in the profit and loss, we never took into account the investment or loans. So you see it here, investment and loans. And then in the cash out, we were just looking at running costs, the variable and the fixed costs, but we didn't look into the assets purchase, which includes the startup cost that which we earlier did. And then if it's a then Bahat taxes, and if you have investors, then the dividends. So you have to account for every way the money goes in and goes out of the business. So the whatever is left is usually cash flow. So if you have more, then sometimes people say it's surplus. If you have less, then it's deficit. So again, cash flow forecast. So that's the formula. So again, there's three parts: cash in, cash out, and net cash flow. So you really look at the money going in and out of the business. And one of the purpose is to make sure that there's money in the bank that you can carry on doing the business, even if you are losing money. So this would have been useful for those business during COVID or any financial crisis. See whether they can continue the business or they can hold out. Again, we'll look into it later. Okay, so what I want to share is similar to just now with the startup cost, the step by step of creating the cash flow forecast example. So it's easier if you do it in Excel, obviously. But for now, I'm just showing the step by step what I would usually do. So this is usually the structure. So again, month 1 to until 12, and then you have total, and you have the items cash in, the investment capital, loans and sales, then the total, and then outflow, assets purchase, stocks purchase, rental bills, mostly the running costs, and then the other items, the loan repayment and the withdrawals. So as the business owner, sometimes business owner takes out money from the business, so you have to keep track of that. And then net cash flow, how much money you have left, and then initial balance and final balance calculates the cash balance at the end of the month. Okay, so let's look into step by step creating it. The FYI, in our business plan series, we actually dedicate one whole hour on this one. So we do a walkthrough where you can do this yourself. But in this case, since it's on YouTube, it's going to be recorded. You can probably pause this and then try it out yourself as well. But if you make a mistake, then I can't really help you because this is not live. Well, this is live, but the recording wouldn't be live. So hopefully you can figure it out. Okay, so let's look into the items. So, capital, let's just say you have $1,000 on your own, but you need $3,000 extra. You can probably get it from a bank or from an investor. And then, Nasi Kato is a simple business. You can probably start it that same month, but let's just be realistic. Take a bit of time from getting that money to setting up your business. So let's just say the first month, you're not actually gonna do anything. You're not gonna sell anything, but at least you have $4,000. So next is we look into the outflow. So assets purchase we calculated before with the startup costs. The stocks purchase, in our calculation there was, but again, just to be realistic, in the first month you're not going to be buying anything yet. And then rental, you probably have to rent out a place first before you put stuff in. And in some cases, there is a rental deposit. You have to add that up. Bills, not necessarily bills in the beginning, but maybe the setting up of the bills. In some cases, you have to connect the electricity, the water, so the cost involves in setting those up. And then salary. Again, you might be doing this all by yourself, but highly recommend if you were hiring other people that they can manage it for you. marketing, probably setting up the banner or something. Then loan repayment. So this depends on the amount of loan, the terms and conditions, but I've calculated $3,000 from a bank in general at 4.5%. You can use Excel to calculate the loan repayment. It's about $70. I round up. And withdrawals, obviously, you don't want to withdraw anything in the beginning, and then you have the total cash out. Okay, so then you have the net cash flow. So 4K minus, oh, I think I made miscalculation there. Okay, I think it should be 4K, 11980. Okay, sorry, apologies for the errors. Again, it's easier if you do it in Excel. If you do in PowerPoint, sometimes you make mistakes. It should be 1980. So uh, let's keep that one now. Okay, so next is so let's skip the initial and final balance for now. I'll talk more a bit about that later. But let's continue on with the second month. So let's assume we don't need any more capital, we don't need any more loans, and we've already started selling. And then we don't need to buy any more assets, but we've started to buy stocks. So as previously calculated, 4,500 per month to sell $6,000 per month. And let's assume almost everything else is the same. And then we have the total cash out. Okay. And then this one is, I think, correct. 230. Yes, correct. Okay, so minus the first month. Salah. Okay, we can actually, assuming from the second month everything is the same, in Excel you could probably copy paste. So everything's just the same for the whole month, and every month is 230. Note that previously when we calculated profit and loss, we didn't count the loan repayments. So it was 300, but now the loan repayment is 70. So that's why our cash flow now is 230. It's less than the amount of profit that we calculated earlier. Okay, so once we have the net cash flow, then we can look into the initial and final balance. So usually initial balance and final balance, initial balance sometimes it's put on top, and then final balance is put on the bottom. I prefer to put it at the both in the bottom so I can see the relationship. But some people likes to have the flow from final balance at the bottom to the initial balance at the top. So it depends on you, but it's okay as long as people can read it. It's fine. So again, ignoring my mistake here, it should be 1980. Okay. So initial balance is zero at the beginning of the month. This is why people will on top usually. So zero when you start off your business, zero. But if you're an existing business, then start off with your uh, previous balance. And then the final balance again, assume this is correct, 2080. And then you can see the initial balance carries over. The final balance carries over for the initial balance for the next month. And then you add up the 230 cash flow to the final balance on there. Okay. So uh, yeah, so it just carries on until the end of the year. So again, it's just a simple one. So if you want to do a realistic one when you record your business, you can as well. But in general, it just carries over. The final balance for this month is the initial balance for the next month. And finally, don't forget we have the total. So total up everything so you can see the cash flow for the whole year. Now keep in mind, do not add up the balances. Just add up the until the cash flow, everything else as well, but not the initial and final balance. It does not make any sense to total up, to sum up your initial and final balance. So at this point, we have set up a whole cash flow. So again, in our business plan series workshop, we actually dedicate some time, 1 hour, to help people to create their cash flow on in the workshop. So if you using this example first, and then if you have time, you can calculate for your own business. Okay, so that's the cash flow. Just checking the chat if anyone has any questions. Again, apologies for the wrong numbers. This is the problem of just creating it on PowerPoint. I mean, I could copy from Excel then to PowerPoint, but sometimes when I want to change something, some things get left behind. Again, apologies for that. Okay. So looking at all these numbers, sometimes people are so bored looking at it. So you can spice it up by creating a chart. So in this case, I'm just putting a chart of the net cash flow and the final balance. So notice that in the beginning we had actually 4,000 in and 2,000 out. Then we have 2,000 left. So the net cash flow is 2,000 and the balance is 2,000. And then every month after that is 230 every month. And then so the cash balance will build up, as you can see. Now, sometimes the cash flow can be negative, especially if you're buying assets, more assets, maybe something's broken, or if you're expanding your business. But that's okay. What's important is the final balance is not negative. The cash flow can be negative, but not the final balance. There'll be a possibility of going down. In fact, some businesses, especially tech businesses, will usually be negative for the first 1 or 2 years. Then they'll spike up and profit. Well, that's the hope for most businesses anyway. Okay, so that's the chart for the cash flow. Okay, so fifth part, I think this and another last part. Okay, so cash and cost. Any questions on cash flow before we move on? Okay, no, no, no. Okay, okay. So cash and cost management. So this is taken from our cash and cost management masterclass. But I'll just go briefly on this. There's a few things that I'll skip through because we've technically already done it. So what we cover is in part one and part two. Part one is income statement or profit and loss and the cash flow statement, which we just covered, and then constructing the cash flow statement and uh, planning with the cash flow statement. So this is a bit more detail on the cash flow. So we would use different scenarios and see what happens with those scenarios. So once you have that cash flow, you can play around with the scenarios. Which again, if you find out more, you can join the masterclass on how you can simulate your business using the cash flow statement. And then the planning, the financing for the business, short-term strategy, deciding if you want to pivot your business, revising business model, and negotiating for financial support. So once you understand the financial tools, then you can look into the strategies that you can use based on what you've done with those tools. Okay, so part one, I'll skim through this because technically we've covered the most of it already. So the tools, the financial tools here stated is the cash flow statement, again, money in, money out, profit and loss, the profitability of the business, and balance sheet. So this is almost related to startup cost as well, but startup cost is the beginning. Well, you can also have balance sheet in the beginning, but balance sheet is usually at the end of the year or at the end of the month, where you see the assets that you have, the loans that you have, and the equity that you have. Um, yeah. I'm not gonna cover that. But it's probably useful to know, especially if you're gonna sell off your business. That's usually where it's usually used. But again, we're more focused on starting and running the business rather than selling off the business. Okay. So this is again profit and loss and cash flow left and right. You can see the difference again, sales minus expenses. Then that's what you have for profit. And on the right side, we have cash flow, cash in, cash out, and what you have left is the cash flow and your opening and closing balance, which we just did. Okay, so skipping through, so you already know what cash flow statement is. It summarizes the amount of cash and cash equivalents entering and leaving the company in and out. Okay, so we've done that already. So what build a cash flow? You need to understand when you need additional financial resources. So when you look at the cash flow that we just did, so the loan that we needed was 3,000 was probably a bit too much. So probably we could have done with $1 or $2,000. Because at the end of it, we still had that $2,000. But we didn't even use it. Okay. So what is it for? It's for the management team, not just the financial team, but also for the decision makers. So when they see the finances, they can see what they need to do, and then you can look into what the outside partners, the financial partners usually, so they can anticipate the profit and flow of the financial resources that will repay the loan or provide a return to the business. So again, the return on investment. So how much money you're making. Maybe you're losing money, but if you had the influx of cash, maybe you could grow your business. So they want to see the risk versus reward based on those finances. Okay, so critical pieces, we've already seen this: sales forecast, cash in, cash out, investment requirements, how much money, the startup costs, loans, where you're gonna get the money, whether it's from the bank or investor or yourself. Okay, yeah, so this one is this is the constructed cash flow. We've already done this. This is just a simplistic way of looking at it. Again, just summarize: cash in, okay, that adds money; cash out, and that reduces money; and then cash flow, what's the inflow required to cover every month. Okay, so again, the details. Okay, so again, as I said, skimming through part one. Now, part two, okay, planning the financing of the business. So once you know the tools, what can you use with those knowledge? Okay, so we're looking into short-term strategy, hibernation, deciding if you want to pivot, revising your business model, and negotiating for financial support. So, key areas of the business, and this is just looking at the cash flow mostly. So cash coming in the business, managing cash going out, and managing inventory. So managing cash coming into the business. So you look into past due accounts. So if people owe you money, make collection as soon as possible, as convenient as possible, and accept receivables. So sometimes when you sell to certain buyers, they owe money. They pay like 30 months later, 60. Oh, sorry, not 30 months, 30 days later, or 60 days later. So if you can make it as soon as possible, or recommended is instead of just letting them owe the money outright, it's recommended for you to get a deposit and balance. Usually, the deposit would cover all the cost of the business, while the balance usually is the profits that you are expecting to make. And then you can negotiate with your clients, work within the available budget. So if they can afford it, so see what you can do together. And again, negotiate with the future in mind. So as long as you don't lose money, it's profitable, and you can maintain that, it's a win-win. Then you go for it. And scan current rates in your industry, whether it's higher or lower. But in general, please do not overly discount your rates, because if you do the calculation, if you overly discount your rates, your business will lose. And some big businesses might be able to survive, but most small business will not be able to survive. Simple example is the canned drinks. So most food stalls can only survive if they're selling at $1. But you can see in some supermarkets they sell it for 80 cents, but only because they already make the money from selling the cartons in itself. So they already made the sales there. So again, negotiate with your clients, and finally send invoices early and often. So if people once people use your services, invoice them, give them a receipt that you've done your part, and then you're asking for payment. So this is a reminder. As good as most people are, or bad, but even for good people who do pay you, keep in mind sometimes things happen. They might lose track. There might be a change of workers. So send invoices to remind people. So not just to be a hassle, but just to remind your clients. So again, it's a win-win. It's not that you wanna hassle them. It's more like if they can pay you, then you can continue to business, and then they can still continue buy from you. So again, it's a win-win. So that's in managing the cash coming into the business. Okay, now managing cash going out of the business. So first part here: freeze non-essential spending and renegotiate prices. So if the company is losing money, again based on the profit and loss and cash flow, so what can you do to reduce your prices? So again, with suppliers, maybe if you buy in bulk or if you promise a long-term contract, can you go for a cheaper price? Or during the pandemic, some landlords were nice enough that they were willing to defer the payments or even reduce the payments. And then manage salary and labor costs. So consider compensation reductions. This is quite bad for the employee side, obviously. But again, if you cannot afford to pay them, then you might lose them anyway. So if they're okay with the compensation reduction, then it's good. But if not, you have to decide whether you want to keep them with the high pay that you can afford, or you wanna well, let them quit and find a better job, because you want to look for a win-win. So if you can't afford to pay them in the first place, you're just gonna suffer. So I reduce that. So and then maintain essential employees. So look at the important people. Look at who's not doing their part. So try to trim the fat. Consider part-time work, sharing opportunities. So in some cases, some work are not 100% all the time every day. So if those things are rarely done, then you might want to consider uh, part-timers or freelancers. I've noticed a few companies actually use like freelance photographers. So it's not because they don't always have events, they don't always take photographers. So only when they have events, then they'll hire the photographers. So again, consider freelancers. And then fellow employees who would be idle. So if employees are not being productive, you can, yeah, you can stop hiring them. Okay, and review your salary structure and look for ways to save cash. Look into again, if people are doing their work, is it does it mirror their contribution to the work? Is that something they're worth? If not, try to again trim the fat. And you don't want to go straight into it, but you might want to go into a short-term plan to lower salaries and wages. You don't want to go straight, straight down. It'll shock your employees. So, again, you inform them, and then if they don't like it, they can look for somewhere else. So it gives them time. But again, we want to look for a win-win. So again, if you hire people, you pay too much, you can't afford it. Your business is going to go down. So we want to look win-win for the employers and the employees. Then finally, managing inventory. So focus on inventory management. You anticipate supply chain disruptions. So again, in this day and age, there's a lot of chain disruptions. So you have to anticipate. So if this supplier is not working, then where else can you get your supplies? Identify inventory for best-selling products, identify which products people keep on buying, so stock up on them, look at for more suppliers for those items, then secure additional critical inventory. So just in case, so just top it up and reduce finished goods inventories with sales and promotions. So clearance sales. So you don't want to keep those items stocked. So you can see a lot of electronic shops. They tend to have clearance sales of the phone covers or the accessories that people rarely use. So usually they sell it at cost just to finish off the previous inventory so they can buy new items that they can sell, that can buy and sell new items. Okay, so let's focus on inventory management. Okay, once you've tried to manage and you can't seem to manage or it's not possible, then there's another option which is hibernation. So if you can't do anything, an example is when during the pandemic, a lot of gyms were closed. A few restaurants had to cease operations. So what could they do? So they could, if they can, temporarily stop so they can pause on the like, rentals, they can pause on their salary payments. So if they can, but in some cases you still have to pay certain administrative fees. Okay. So is hibernation for you. So you look into your forecasts. So is the drop in sales significant? Is it short term or long term? If you see the time is short to medium term, before you can resume, then maybe you can hibernate, or else it's just shut down the business. But if you see light at the end of the tunnel, if you're hopeful and if you think you can manage to survive until then, just continue with the hibernation. But recommended if you're doing hibernation, avoid taking significant debt. Inform customers that you're temporarily discontinuing. And if you know, the moment you know that you're going to restart, share when you plan to recommence, when you relaunch. So that is an option to stop your business temporarily. Then, if in the case that you can't hibernate, then you might want to look into pivoting. So we also have another masterclass on business model canvas, pivoting and prototyping. So once you have an idea of your business and now your business has an issue, then what can you do to overcome it? So uh, again, it's the question is again finance belonging, yeah, but also managing your finance. If the finance is just one part of the business model is the other part. So if the business model is not working anymore to support your finances, then you need to change your business model to support your finances. So there's several pivots: product pivot, customer segment pivot, customer pivot, channel pivot, technology pivot, and engine of growth pivot. So again, during the COVID-19 pandemic, there was a lot of businesses that were affected, and a lot of them had to pivot. If not hibernate, then pivot. Okay. So again, we have another masterclass, one on business model canvas and one on prototyping and pivoting. So again, if you want to find out more on this business model canvas, you can join that. I think I also covered a bit of the business model canvas in previous topics. I think business planning was on February, or was it on? You can check the playlist. Okay, this is just a simple example using the business model canvas to pivot. So, example, I mentioned gyms. Gyms business model canvas might look like this, but when the pandemic hit, a lot of the business model was not working anymore. Specifically, the workout space was no longer available, and then that affected a lot of things. So once you know that doesn't work, you look into what else can you do. So that the other option was the online channels. So online channels, or you rent out your equipment and so on. But then with all those changes, keep in mind it will also affect your costs and your revenue. On the bottom here, you see the cost and revenue. So the previous ones are no longer working. But then once you pivot, then new costs and new revenue come in. What's important is those new ones either help you sustain or improve on your business model. Okay, so again, that was the business model canvas on the financial management. Okay, so I'm just gonna pause there for a while. So again, this is an example of a gym pivoting from the current business model to adapt to the new business model for the new normal. Okay, so again, this is an example. So just checking on. Okay, so last one on the financial management. So think ahead. So if you need to raise additional equity or funds for the next few months, talk to your investors, talk to your bank. Some banks are okay, especially if you're running business already. They know that you are trustworthy. They know that you're reliable. Then they might be able to help you. I think during the pandemic, they also actually supplied for assistance to help you survive through the pandemic. Then you need to analyze the risk and return. So again, looking at the new information, the expansion costs, if necessary, and the rewards from the investment. So you research, you gather in information, and you act quickly as soon as possible, especially since everything usually changes. And demonstrate your plans to your financial supporters, the bankers or investors. So for bankers, usually they still need a business plan, business model, more on the contemporary investors. Okay, but in some cases for banks, they'll probably ask for your collateral offering. What do you offer in return for that financial support? Some banks will require that. In some cases, it's just a simple case of how much money you have left. That can be the collateral as well. Okay, negotiate for financial support. Check the changes in bank and the utility policy. So sometimes they change, especially during the pandemic. There was a few assistance, so you look into that. What are they offering? Ask for forbearance on the moratorium on payments, interest on payments, reduce interest. You can negotiate with your financial supporters. Of course, if you can, that's great. If you can't, try again. Carefully consider extending your credit line. So the more you owe money, then the longer that you need to get out of debt. But hopefully, the support that you get will help you grow your business so that you can pay that debt earlier. So in other countries, you might consider how it affects your credit score. So in general, if you loan money and then you pay back consistently, you have a good credit score. But if you people see that you've loaned money and you've never paid back, then that will impact your ability to loan in the future. Okay, so look for other alternative financial support. So not just from banks, but government support was also available during the pandemic. Maybe the lowered taxes and fees. I think there's a lot of import taxes that was reduced. Bilateral and multilateral banks. Some banks like Dare, sorry, like BBD actually collaborate with Dare, so they might have grants that might support your business. Other NGOs, which technically includes LiveWIRE, but we don't support financially mostly on education like these videos. And your buyers, sometimes your buyers can be your supporters as well. So simple one is pre-order, or people wanna help support your business to survive, that they can support as well. Okay, so last topic is on cash flow. Okay, so as mentioned, with all this financial information, sometimes some people still can't do it. So the next best thing is you can use an app. The one that we're recommending right now is iCashflow.bn. So it's from a local developer that we hired to create the iCashflow.bn. So you can use it to manage your cash flow, either for business, or some people might use it for personal as well. Okay, so if you want to download it, it's available on Google Play and App Store. So you can just keep track of your income and expenses. The reports are created, it can be emailed to your account. So it's only available for Bruneians. Sorry for those who are watching this YouTube from other countries. So it's only available for Bruneians. So, or at least Brunei numbers. So that's a loophole. I don't know how you're gonna get Brunei number. Okay, so again, it's available on Google Play and App Store. So I'm just gonna keep the QR code here for a while if you wanna scan, or if you can pause it right now so you can scan it easily. So on the left is the Apple's App Store, and on the right is the Android Google Play Store. Okay, so hopefully you pause. Welcome back. And then oh, that's okay. Somehow my slide, okay. So finally, resources. Okay, so where else can you learn? So as mentioned, we have several workshops that we teach more of this. So again, this is more one way. But when we are in workshops, you can ask questions, or if you have problems with certain topics, you can find out more. You can get guidance. So the basic one is our bright ideas and our business plan series. But this is more on the startup, so basic knowledge. So we teach the basic finances, which is what we just covered, the re- the startup costs and the profit and loss. But in the business plan, we cover more on the cash flow as well. So in creating the cash flow, as mentioned, we do the step by step on using Excel to create it. And then in master classes, the last part was based on the cash and cost management, but we also have intro to financing and raising capital. So again, the topic of raising capital, you need to know how much money you're gonna take, you're gonna need, and how much money you're gonna get back. Okay, so that's basically it. But I'm just gonna advertise a few of our workshops here as well. Oh, forgot to mention. Okay, so as mentioned, the bright ideas and our business plan series. Wait, I wanna go straight to okay. So just sharing, we've already launched our learning management system. You can learn the first part of the bright ideas. So we haven't covered the financial part yet. That's the second part. So the first part is more on the entrepreneurial mindset and the creativity required to start and run a business. But the second part, when we publish, we'll also have the financial part and also the legal processes to start a business. So if you want to learn more at your own pace, there's a few quizzes, and you can get a digital certificate as well. You can go to levelbruneidigital.com. You can pause here to either scan the QR code, or you can just type in the website Level Brunei Digital to go to that website. And for your information as well, today is 22nd November. 23rd, tomorrow, we will have our business awards. So with all the knowledge that you have of managing your business financially, operationally, and so on, if you want, you can try your luck, try your skill in joining this business awards next year. But tomorrow is the final part, the prize presentation ceremony. But next year, quarter one, will start off again from the beginning. We'll provide the workshops as well that I mentioned, that you can improve on your business plan, your business pitching, and so on. And at the end of the year, you can go to the press presentation ceremony and you might win some cash prizes. So look for that in next year in quarter one. Okay, so if you want to find out more, you can just go to our website or our IG at LiveWIRE Brunei. Okay, so that's basically it. We're basically done. So if I was to continue, it's either we're gonna plan next month or we're gonna continue next year on the next topics, which is presentation and pitching, or ICT for business, or we can combine it. We'll look into what we can do next session. Okay, so just waiting for any questions. So looking, oh, there's a few viewers. Okay, any viewers have any questions before I end the session? I am curious if I do this. Oops. Okay. 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 I'm just checking the YouTube channel. Okay. Okay. So no one else is asking any questions. Time is 3:42. Again, apologies for the late start and the technical issues, but we've managed to go through it. If anyone has any questions, I don't mind answering. Heck, if anyone wants me to do a live Excel demonstration, I don't mind. If anyone asks, if nada nada lah. Okay. So I know there's a slight delay in the YouTube from uh my stream. Let me double check the timing. How slow is it? So I'm just checking my audio. Wow, the slide berubah je lah sa bawah. Ouch. Okay, need to update one. Sorry for that. Bidat eh. I thought I did, but apparently I didn't. So if nothing else, it looks like there's a 1 minute delay. So I'm just gonna end. Oh, okay. Thank you for that feedback. Thank you, Edith Wong. Okay, just again waiting. I'm just waiting for the delay. If anyone has any comments or questions, you're welcome to it. Thank you for enter. Oh, okay. Okay. See you around if you didn't. Okay. I guess that's it. Oh, subscription fees. Uh, are you asking for LiveWire channel subscription. We're not charging any subscription fees yet, but for our courses, live courses, we charge in general $10 to $15 per day, depending on the workshop. Like our Bright Ideas workshop is 2 days, morning and afternoon, so that's $30 for 2 days. But for our master classes, it's half day, is $10. But yeah, that's a good idea. Subscription fees. So we can get more subscribers, but for now we're not looking into subscribers. Thanks for the idea though. Ya tu IT. Macam nak kena buat tu subscriber tu channel. Okay. Okay, so that's the final say. I think the comment will still be up. I can double check later. But thank you everyone for your attention so far. I hope you had a beneficial 1 hour and a half. So I hope to see you next. Or else you see me more. Just check the playlist of the other topics if you have time. I know some people, like myself, I just turn on certain videos like it's a podcast I just listen to. So I hope this is beneficial for you. Okay, thank you very much. Goodbye.